Good morning, good afternoon, good evening. It's your boy Gary Scott, aka the Solid Pip Assassin. And today we're back with another educational video. All right, guys, with another educational session with opportunities and setups that are going to be very, very much so beneficial for you to become a very much so successful trader. All right. With that being said, let's get straight into it. All right. The market, right? First things first, the market moves in threes. That's what we need to understand, right? The market moves in threes, right? Moves in an uptrend, moves in a downtrend, and then it moves in a sideways moving market. Okay. Again, an uptrend, a downtrend, and a sideways moving market, right? Those are your three trends. Then you have three areas of value. You have a fair value gap, you have an order block, and then you also have a structure level. All right. Those are your three areas of value. That's where you want to take your entries from. All right, when it gives you your candlestick confirmation pattern from that level. Okay. Then you have three bullish market shapes, market patterns. All right. Then you have three bearish, right? You got three bearish market patterns, three bullish market patterns, and then you have your shapes, all right, which is your symmetrical triangle, your ascending triangle, your descending triangle, and then you have your bullish teacup and your bearish teacup. Okay. Now, let's take a zoom in for a second, right? I'm going to explain all of these that I just went over with you, right? When we're in an uptrend, right? If you've been on my sessions before, if you've seen my videos before, I'm very, very, very much so consistent in the method that I teach. I'm very much so consistent with doing the same thing over and over again. Why? Because the market does that very thing. All right. It repeats itself over and over and over again. You have to put yourself in a position, right, to catch it at the perfect time. All right. So if we're moving in an uptrend, right? If we're moving in an uptrend, what we need to be doing, guys, is we need to be, of course, buying. At no point in an uptrend should we be selling. Okay. It doesn't matter the time frame you trade on, it doesn't matter the type of trader that you are, right? The method that I'm showing you guys will work on every single time frame for every single pair. Okay. So if we're moving in an uptrend where price is creating higher highs and higher lows, higher highs, higher lows, higher highs, and higher lows, of course, we want to find areas to buy from. So when price takes out a lower high and it creates this new high, that's indication to let you know that what price is looking to buy. Okay. So what you're waiting for is for price to pull back to one of the three areas of value. In this case, let's just say right here, price pull back to a fair value gap, right? If it pulls back to a fair value gap, we want to see a bullish candle close above this fair value gap level. Okay. We want to see a strong bullish candle close above this fair value gap level. The moment that you see that is the moment that you can take your entry, and then you will place your SL below your fair value gap level. Because here's why. The moment that price, right? The moment that price, if it does end up closing below your fair value gap, your area of value, right? It was meant to happen. All right. That's when things happen and you lose a trade, right? You're not going to win every trade. Every trade is not going to go immediately in profit, right? That's just unrealistic. And I like to be a very realistic teacher, right? And a realistic educator because, right, I don't want to give you fluff and make you believe that every trade you get in is going to be profitable for you. That's just unrealistic. But the method that I'm giving you puts you in a position to be more so profitable than to lose in a trade. Okay. So when price does this, we look to take our entry, SLs below our area of value, and then we're taking the trade back above the previous high that was created. Okay. The moment that price breaks structure, once it breaks this high, it's considered a break of structure, BOS. When price breaks the structure of that previous high, it's looking to create a new high, right? The moment that it creates its new high, it has to catch its breath. Whenever it catches its breath, it's looking to pull back to one of the three areas of value. Okay? One of the three areas of value. In this case, right, when price came back down to this level, it found the last down candle before price decided to break structure. And that's what we will call our order block. Okay? So when price gets here, just like it came back to the fair value gap and you want to see a bullish candle close above, the same exact thing goes into play when it comes to an order block. All right? You want to see a bullish candle close above your area of value, which is your order block, and then you will place your SL beneath your order block. Okay? You take your entry, you take the trade back towards your high, at your high, or above your high, and then you wait for it to create its new high for it to retest. In this case, right, when price got here and it broke structure, right, this is considered a structure level, right, because this level meets this level. All right, and this was a previous level of structure that got broken. So when price gets here, what we want to see, right, is we want to see a bullish candle close above this level with our SLs below our area of value. Okay? The moment that happens, we take our entry and we're aiming towards the high. Okay? Same goes for when price decides to transition and move in a downtrend. Right? Price will take out a higher low point to indicate and let you know that price wants to transition to potentially move into a downtrend. All right. So when price pulls back, it can pull back to an order block. It can pull back to a fair value gap or a structure level. In this case, it pulled back to an order block. Okay. In this case, instead of it being like an uptrend where it's the last down candle before price broke structure, now it's the last up candle before price broke structure. So we got here, we want to see a bearish candle close below our area of value with our SLs above that level. And then we're looking to take the trade below the previous low that was created. Okay. Once price creates that new low, we're looking for the price to retest again back to an area of value. Let's just say for this one, it came back to an order block. So what we want to see is we want to see rejection, and we want to see a strong bearish candle closing below this area of value. The moment that happens, we take the trade, SL's above our level, and we're taking the trade to the low side. Okay. Price creates that new low. It decides to retest, right? We're retesting back to a structure level in this case. So what you want to see is a strong selling candle coming from this area of value. The moment you see that is your entry and you're placing your SL above this level. Okay? So if that has made sense to you thus far, I want you guys to type into the chat, right? I want you guys to type into the chat the number 3, okay? The number 3 is what I want you guys to type into the chat if that made sense thus far. All right, good. Great. So now, right, I broke this down to you guys in that format, okay? When you see a ranging market, this is something that we like to stay away from. But there is chances to be very much so beneficial when you see this ranging market, because when it comes about, more times than not, whatever it does before is going to do after, right? Not all the time, but a good majority of the time, whatever it does before, it's going to do after. And I will show you guys examples, right? Live examples to attack the market in this very way that I'm showing you guys, okay? So we expressed and we went over the different trends, right? Now let's go look at the patterns and the shapes, right? The patterns here that you have, right? These patterns start a downtrend. Are they also can be continuations within a downtrend? All right. So you have a double top, right? You have a head and shoulders pattern. And then you also have a triple top. All right. These patterns indicate and let you know that price wants to move to the downside. Okay. Then you have these patterns. which is simply the vice versa of what it was for the bearish patterns, it'll be the same for the bullish. So you have instead a double top, this will be considered a double bottom. All right. Then you have your inverted head and shoulders. All right. And then you also have your triple bottom. Okay. These patterns you will see at the beginning of an uptrend, right? The beginning of an uptrend, or as continuation patterns within an uptrend. Okay. So with that being said, let's slide over. All right. And these are your major, some of the key major shapes that you would actually see in the market. You have a symmetrical triangle. Price can go either way when a symmetrical triangle is being created. Okay. It can go from an uptrend, working inside the symmetrical triangle and push to the upside, or it can go from a downtrend, working to a symmetrical triangle, right, to push to the downside. It can go either way. All right. Then you have is it better to use the line charts to identify these patterns? You most definitely can. All right. You most definitely can use a line chart to identify the patterns if it makes it a little bit more easier for you, for sure. Okay. Then you have your ascending triangle, right? Your ascending triangle. When this pattern is created right here, when this shape is being formed, right? Price would make a movement like this, right? Where it's making consistent higher lows, and then price is looking to work its way back up to the upside, right? Then you have your descending triangle, right? Where price can be moving from a downtrend and working its way, right? Creating lower high standpoints to where price can move to the downside. Okay. All right. And then these two patterns, if you've been on my sessions before, if you've seen my sessions before, right, I've added these shapes that are called teacups. You have a bullish teacup and you have a bearish teacup. Okay. Now, when you think about a teacup and you're drinking a teacup, right? The teacup is moving in a bullish formation if you're moving it towards your mouth, right? Right? Price is looking to head where? To the upside. Now, if you happen to turn that teacup over, right? Where do you think the liquid is flowing? To the downside. All right. So price can be moving from a downtrend, working its way in the teacup formation for price to push to the upside. All right. And then vice versa for your bearish teacup, right? Price was moving in the uptrend, right? It started to make consistent lower highs for price to then transition and push to the downside. Now, everything that I've just simply explained to you guys, I'm going to go to the real-time chart and actually show you these things so that way you guys can have an understanding, right, of how it operates. But before I do so, right, like I said, you got your fair value gap, your order block, and your structure level. Now, if you guys want to take a picture of this, please feel free to do so. All right, I'm going to give you guys 1 minute to do so, and then we're going to go and check out the real-time chart, right? So that way we can go over these same things in real time. All right, so I'm going to give you guys just a moment. All right, we got it. Good. So let's go and let's look at, all right, let's go look at some setups. All right, prime example of finding a teacup pattern right here, right? Price was transitioning from what? If we look at this, right, what type of trend do we have here? Right? What is the trend that we have here? Down, right? We have the downtrend. So, right, price if we just have, sometimes all it takes is you just taking a step back and actually looking at the market, because the market is going to tell you what it wants to do always. Okay. So remember how I told you, right? Price was moving in a sideways moving market here, right? Then it transitioned to moving towards the downtrend. How do we know it's a downtrend? Well, it took out a higher low, right? This was a lower low, a higher low, right? Price couldn't surpass this level, right? So the moment that price broke this higher low, right, and gave you your what? Your break of structure, right? Price goes to create its lower low for then price to do what? To retest. What level did price come and retest to? Right? It simply came back to a fair value gap level and a structure level that plays within each other. So, Gary, what's a fair value gap level? Well, let me zoom in and show you guys, right? So we see how this candle's wick doesn't meet any candle's wick on this body of this particular candle, right? And it leaves a space within the body of this particular candle. So that's what gives you your bearish fair value gap. So from this candle's wick, right, to this candle's body gives you a fair value gap level. You see that, right? This identifies as a fair value gap level. There was no wick that met this wick on this candle. So it causes space between the body of this candle. So now, also, what do you also have? This is the neckline of a what? Right? You got two patterns here that I already showed you guys, right? And then are they always going to be beautiful? No, they're not always going to look perfect, right? But can anybody tell me what this particular pattern is right here? Right? 1, 2. What would you identify that to be? A double top. There we go. Right? That's a double top pattern. So, and this is the neckline of the double top pattern. What ended up happening? Price created a higher low standpoint. It came back. And what did it also create at this particular standpoint? Right? Remember how I told you it can form to let you know that price is looking to transition. And then it also can make these patterns, right, to show you that it's continuing to go to the downside, right? So you got two double bottoms right after each other, right? So if we got that, that's like double confirmation that price is definitely wanting to move to the downside more times than not, right? So what do you get? The break of structure. Price pulls back to your fair value gap level, but it also comes to the neckline of the what? It also comes to the neckline of the double top, which gives you a structure level. So that's two areas of value playing within each other, which is like double confirmation, right? That this level is very, very strong. Okay. So what we want to see from this level is only thing we want to see is we want to see a bearish candle close below this level, right? So if we enter after this candle close below that level, what we will do then is we will have our SL, right? We'll have our SL above our areas of value, right? A little bit above our area of value. And then we're aiming, right, towards the low. Do we always have to go towards the low? No. Sometimes we can just simply go for a 1-to-1 risk to reward ratio. So whatever your SL is, that's what you want your take profit to be. So if your your SL is 50 pips, then you would want your take profit to be 50 pips. That gives you your 1-to-1 risk to reward ratio, right? But if you add 50 on top of 50, that gives you 100, right? That doubles. So then it gives you your 1-to-2 risk to reward ratio. So if you hear people talking about that or saying that, that's what that means. Okay. So 50 pips going from 50 pips to 100 pip gain, a 50 pip loss to 100 pip gain, that gives you your 1-to-2 risk to reward ratio. And what do you get? You got a bearish candle closing below. We take our entry, right? you deal with a little bit of drawdown, which is fine. Sometimes trades are not going to always go straight into profit. Then sometimes they'll go into profit and then go into drawdown a little bit. But you have to trust your analysis. You have to trust what you see. Okay. So we take our entry, right? If we want to go towards the low, that's of course up to you, right? As you see, price went and actually broke straight through your take profit area. And if you see, this was a great risk to reward ratio, right? This method is always going to give you great risk to reward ratios no matter where it is, right? But it has to align and come back to these areas of value. That's where you get your entries from, right? And then from that point, all you're looking for is your candlestick confirmation off of those areas of value, right? Did that make sense thus far? If that made sense thus far, right? Let's type a PO3 in the chat. Right? If you got questions, let's type a 1. If you don't have any questions, everything is good, we're going to go and we're going to find, right? And it's going to be like this, right? For example, you took out the lower low, right? Price took out the lower low. So now what do you think price is setting itself up to do? It's setting itself up to create a lower low, right? For price to pull back. And in some cases, right? Right? The trend may be very short term. It may not be a long-term trend, right? But what you have to take into account is once price reaches a certain level, right? If we look at this, if price reaches this certain level, we have to understand that this is, right, what I would like to call a teacup pattern. All right. Let's put it into perspective. You guys see that? How price works within that teacup pattern. It was moving into a downtrend, right? And then it started to create consistent higher low points. Price couldn't go past this low. Price also couldn't come past this low as well as this one, right? And then what ends up happening? Price takes out a lower high. So when price takes out lower highs, right, it's then setting itself up to find, right, areas that it can buy from now. All right. So if we look here from wick to body, if we drag this level across, right, we see how price broke structure here. We see how price created a new high and decided to retest at this structure level, right? What did you get at this structure level? Right? You see how these wicks play a major factor? Right? What you see is you see a bullish candle closing above this level, which means we can take our entry here, right? Entry, SL below your area of value, and you're looking to take the trade where? Right? At least a 1-to-1 or 1-to-2, right? Or if you can find areas of value that have not been touched on the back end of a trade. So we see how price stopped at this structure level and it didn't come back to the last down candle, or I'm sorry, the last up candle before price broke structure. So the moment that price decides to change its trend, we know that there's an area of value up here that has not been touched, right? So boom, boom. The last up candle before price broke structure gives you your order block, right? So if you wanted to take this trade, right, from this particular entry point all the way to here, you most definitely could, and you would have had a great 1-to-2 risk to reward ratio. And then now you're moving smoothly within an uptrend. Okay. I just wanted to show you guys how that operates and how that works, right? So now let's go find an uptrend, right? And how you can look to see to attack that as well, right? Boom, right here, right? So what do you end up getting, right? What do you end up seeing from this particular standpoint, right? Price took out a higher low, right? Some people, and this is okay, some people would have done this. If they would have seen this higher low being taken out, right? This is what I mean when I say you have short-term trends and you have long-term trends, right? Price did what? Price broke this higher low level, giving us the break of structure, BOS, right? Creates that new low. Now, what do we want to see? We want to see price pull back, right? In this case, what did price come back to? Right? It came right back to an order block level. It's the last up candle before price broke structure, right? One of the deepest areas of value before price broke structure. What ends up happening? Price falls down, but can't not go back below this low, right? So because it could not go back below that low, right? We see how price broke this level of structure right here, right? The moment that price broke that level of structure here, right? It created this new high and it's decided to retest. Now, what did it retest to? Right? Does these two wicks meet each other? Right? If I put this crosshair right here, does these two wicks touch the body of this candle? Right? Do they meet? Absolutely not. So this is what we would like to call our fair value gap level, right? From this candle's wick to this candle's wick, you guys see the space that's there, right? Right? There's a space there that needs to be filled, right? So if you see a candle's wick do this, and then you see a candle's wick do this, and they don't actually meet within the body of this candle, right? That gives you your fair value gap level. And it'll be the exact same for a selling candle, right? So these two candles right here, this candle's wick and this candle's wick, creates a fair value gap. You see how they don't meet, right? Did price respect that fair value gap? It absolutely didn't. It shot straight through it and came right back above, right, to test one over here, right? A tighter one, right? Price came back to that level. Price fell down, but it eventually came right back above this lower high, right? Created a new high. Price came back to the fair value gap level. Again, what do we want to see, right? We want to see a bullish candle closing above our areas of value, right? And if you look, you have multiple opportunities to capitalize, right? Let's just say we entered off of that bullish candle and we wanted our SL to be below our area of value. You could have set this up like this, right? And then you're aiming for your highs. You guys see that? That's how that operates. Okay? And if you see price went down, came near your SL, sometimes, like I said, a trade will go into drawdown. It will happen, right? But are you going to trust your analysis? Are you going to trust your setup? Because if you guys pay attention, if we become patient, we see how price ends up taking out what? Our TP. All right. Does that make sense thus far? Right. You end up getting a break of structure here. Right. You get your break of structure. Price creates that new high. It not only takes out this high, but it takes out a previous lower high. It takes out a higher lower high. Right. Creates that new high. What does price retest back to? The last down candle before price broke structure, which is your bullish order block. The last down candle before price broke structure, right? From the entire wick, the entire body of this candlestick gives you an order block level, right? So from this level, you see how price is rejecting off of this point. All we want to see is price close above this order block. The moment that we see price closing above this order block is the moment that we can take action. All right. So if I seen this, right? If I seen this and I seen how this candle rejected not here, all here, but as well as here, I can take my entry being very aggressive there with my SL where below my area of value, and I'm aiming towards my high, right? And if you see, this gives you a 1 to 2 risk to reward ratio. Money is made, you go about your day. All right. Just as the example that I showed you guys, right, is the exact same way it operates within the market. All right. Yes, sir. It works on any time frame for any pair. You just have to follow the structure of the market. Okay. You just simply have to follow the structure and the trend of that market for that time being, right? So you make your money, you go about your day, right? What ends up happening? Price break structure, right? We got the break of structure, right? You get the break of structure, price creates that new high, price retest. Now, what does price retest to? Right? Remember, we have a fair value gap, we have an order block, and then the last one is a structure level. Well, this is a structure level. It was a previous high. So from the wick to the body, right, gives you a structure level. If we look at this, right, look at price, came right back to this structure level, started to reject, and then it started to give you bullish candlestick confirmation patterns. That's all you want to see. We take our entry, right? We take our entry, SL's below our structure level, and then we're aiming at the high, right? Towards the high or above the high. And in this case, right, still gives you a great risk to reward ratio. You enter the market, you make your money, you go about your day. Okay? Does that make sense thus far? Right? The very signal that I sent this morning, right? I use this very exact same method, right? My method does not change. It's simply what the market gives us, and we're finding a way to make sure how it operates the proper way. That's all we're doing. We're making sure it's operating the exact way it's supposed to. Okay? What ends up happening? Price break structure takes out the higher high, right? Gives you the BOS. Price creates that new high, right? What does price pull back to? The last down candle before price breaks structure. The last deepest down candle and the last deepest buy candle, right? That's what you want to find. So for a downtrend, it's the last deepest buy candle before price break structure. And then a downtrend, it's the last down candle before price break structure. All right, that gives you your order blocks. So you got the break of structure, price creates that new high. Where does it come to? It comes right to right there, right, literally right smack dab to your order block. You see your entry setups here. You take your entry, trade back above those highs, and then you go about your day. Okay? If this has made sense to you thus far, type of PO3 in the chat. All right, great, great, great. So that's the method in itself, guys, right? In its most simplest form. This is how you properly attack the market. Okay? You do not just want to blindly enter from certain levels. You want to come back and find entry points from these areas of value. So that way you can catch your entry points, right? At premium levels. Okay? For example, right? price left a fair value gap here. If we look at this, right, let's take this away. You see how price, right, this candle's wick and this candle's wick does not meet within the body of this candle, right? That gives us our fair value gap level, right? From wick to wick, that's your fair value gap level, and it's never been touched. So when price decides to transition and change its trend, look where it comes right back to. It comes right back to that fair value gap level that has not been filled. Okay? With that being said, guys, with that being said, if with that being said, that's simply how the market operates. Now, I showed you guys that example, right? I showed you guys the what? The teacup. Now, what I want to show you is, right, a ranging market. I showed you an uptrend, showed you a downtrend, showed you a teacup, right? And I showed you some of the patterns that are being created in the market. And then you have what we have here, right? What type of market is this one here? Right? What type of market is this one? Right? If you say if you say it's a ranging / consolidation market, you're absolutely correct. Okay? Right? Big moves tend to happen right after these accumulation stages, which is also considered a ranging market. Okay? So let's slide over here, right? And let me delete this for a second, right? I'm gonna delete this setup over here for a minute. I just want you guys to take a look at this, right? Obviously, this level of structure was being respected, right? It respected it once, twice, 3 times, and even a 4th time over here, right? If we draw out a particular pattern, right? If we draw out a particular pattern, hold on 1 second. Boom, boom. What type of pattern is that, right? It's very much so one of the ones I just recently went over with you guys. All right. Debbie said a flag. No, it would not be a flag. So what this is, right? We don't call it a flag, right? That's not the flag setup. This is called a symmetrical triangle, right? You see that? So if we go back, right? If we go back, does this look very similar to this one? It looks very similar to that pattern right there, right? Which is our symmetrical triangle. All right, remember, it's flowing from a downtrend and then it's making lower highs and lower lows, right? Lower lows and lower highs. And then what eventually happens to price? It was going from a downtrend, it transitioned and broke structure to the upside, right? Took out lower highs to let you know that price wants to continue to head higher. Okay? Right? Can anybody tell me what this particular pattern is right here? Right? What particular market pattern is this here? Let's see. If you say inverted head and shoulders, you are correct, right? Because you have your shoulder, your head, and your shoulder. And where does that actually appear at? It appears at an area of value, right? You see, this is one of the last down candles before price broke this structure, right? So if we put this entire candle inside of our purple box, right, for our order block, it appeared right at an order block, which gives you confirmation that price wants to move to the upside, right? One of the last down candles before price broke structure. Price came right back to this level, created an inverted head and shoulders edit, and then now we're looking to take the trade back to the upside. All right. So Gary, where would I take my entry from? Well, you can simply take your entry the moment that price give you this bullish candlestick closing above the order block. You can take your entry because that's what you want to see. You just want to see a candle close above or below your area of value, depending on which trend you're in. Right? I place my SL below my area of value, and I'm looking to take the trade back where? Back to the upside. All right. Can anybody tell me what this particular pattern is? Right? Head and shoulders. Right? A very, very much so short term head and shoulders pattern, as far as the trend is concerned. Right? So if you guys can see this, man, everything that I've showed you in the example applies when it comes to the charts. It's about just simply finding the trend of which way the market is operating and moving. Okay? Because then at that point, it's about finding the break of structure, then waiting for price to come back to those areas of value so that way you can take action. Okay? So, with that being said, guys, right? That'll be the end of this session for today. Right? That'll be the end of the session for today. And I'll see you guys next time. Peace.